Jen, thanks so much for joining us today. You reported earnings last week. They were better than expected, but your shares are down another 5% today. They're down about 75% in the past 6 months. What would you say to investors who have these persistent concerns, not just about the retail space in general, but specifically about your business?
Well, I think that there's a lot more investor education that we have to do as Rent the Runway. We just came out into the market really in Q4 of last year. And as our business grew tremendously in 2021, we also saw tremendous margin growth. So strong margin growth, our free cash flow margins, just EBITDA margins, gross margins. And I think that this year, as we're operating in a more normalized environment, one of the best macro environments that's ever existed for Rent the Runway, and as we're expecting really strong revenue this year, you'll see a lot of operational leverage and really significant movement on our path to profitability.
And speaking of that path to profitability, talk to us about your subscriber base. As of the end of your quarter, which was at the end of January, you had about 160,000 subscribers, but about a quarter of them were pausing their subscriptions. What are you seeing so far into this quarter?
Well, we've seen a really strong bounce back after Omicron subsided, which enabled us to give both strong Q1 guidance, but also strong revenue guidance of 45 to 50% growth for 2022. This is going to be a huge year for people renting the runway. We have 2.6 million weddings this year alone, which means 2.6 million rehearsal dinners and bachelorette parties and honeymoons. It also means that people are heading back to the office and they haven't bought workwear in the past 2 years. So whenever anyone wants to make a change in their wardrobe, we can kind of come in and prove that this is a financially smarter way to change your clothes.
What about the pressures of inflation and economic uncertainty? One would expect that those would really be pressuring your prices and putting pressure on your margins. But you said in the earnings call that inflation is actually a win for Rent the Runway, which seems a little bit counterintuitive.
Yeah, inflation is a competitive advantage for us because why does someone sign up for a subscription to Rent the Runway? They sign up because for $140 a month, they can get $4,000 worth of designer clothing, that they can have variety and newness in their wardrobe and get 20x their spend. Now, the cost of fashion is going up exponentially between 2021 and 2022, so that basically the savings that you're getting from renting a dress for a special occasion or signing up for a subscription to us is even higher. Now, we've been able to change the way that we acquire our inventory, and we're acquiring the majority of our inventory now via manufacturing it ourselves or via consignment. So we're not having to lob those same price increases that you're experiencing in a traditional store onto our own customers.
Hey, Jennifer, it's Deirdre. So you sound optimistic. You said that the company is entering one of the strongest environments for rental that you've ever seen, yet you're still forecasting losses this year. If you cannot reach profitability, even in adjusted EBITDA terms, in such a strong environment, how do you get there?
So we gave guidance that we're going to be reaching adjusted EBITDA profitability in the next 3 to 5 quarters. And of course, we're measuring the business to our cash margins because for us, profitability is free cash flow profitability. So we're deciding this year to spend more in OPEX and less in CAPEX because of the success we've had in acquiring inventory on consignment. We can choose to spend less on CAPEX and make those investments that actually bring us to profitability quicker.